Okay. Doug, are there any public comments this morning?
Yes,
This
yes, sir. We
afternoon?
have one public speaker today, Mary Bowden.
I presume that Finance Committee is concerned with the money spent by the MTA. And one of the reasons this meeting started so late was at Bridges and Tunnels, they were discussing toll collection, electronic toll collection, better known as open road tolling. Open road tolling means that the driver does not need to know where the Easy Pass reader is. Whether you know it or not, there are hundreds, if not thousands, of Easy Pass readers under traffic lights, street lights throughout the city of New York. They require no gantry. They're there. Bridges and Tunnels has built special gantries to keep these things, these readers. They could be placed on a Henry Hudson Parkway under the upper deck. They've built a new gantry. That's cost money. One, for constructing it, and two, for maintaining it. With electronic toll collecting, there is no such thing as a toll plaza. They've put up new signs that say, "Toll Plaza ahead," where there is no toll plaza. They can't understand that toll plazas do not exist in open road tolling. The Thruway has one in Suffern. There's a open road tolling, nobody slows down. Garden State Parkway has them all over. So does New Jersey Turnpike. Does Bridges and Tunnel think they need to reinvent the wheel that is broken? Now, I've been speaking about this repeatedly, but maybe finance is the place where I should have been talking, because money is being wasted at an enormous rate. In 2016, all toll agencies will be connected electronically. The hubs are being built at this time. There will be information exchanged on license plates in every state. After 2016, it will be rare to see anyone collecting a cash toll. The concept of a toll plaza is over. The signs do not belong there. Any signs about toll collections belong before their last exit. After the last exit, the driver can't do anything. So why are you putting signs up? This is distracted driving. How many of you have stood at a traffic light and the light turned green and the guy in front of you stands there because they're doing their email or texting? The transition from the 20th century to the electronic is difficult, and Bridges and Tunnels having a tough time giving up a toll plaza. Gentlemen, it's over. Your finance, please don't waste money.
Thank you, Mr. Bowden.
The next item on our agenda is the approval of our minutes of our September 16th meeting. A motion, please. All in favor? Any opposed? Minutes are so approved. Next thing, Finance Watch. Doug?
Yeah, there are no changes to the work plan, so next would be Finance Watch. Pat McCoy is here to take us through that.
Thank you. Finance Watch appears in your committee book on Roman 4-1. This morning there's a number of transactions that we're going to report. I won't read through all these individually, but just bring to your attention, we continue our fuel hedge program. As you can see, we executed the fuel hedges on September 10th and again on October 11th. Again, consistent with the program. Those were competitively bid hedges. We want to just provide an update on the bond anticipation notes that were authorized by the board post Sandy. For any approved capital project, we have drawn $300 million down from those two facilities. The LOC extension, we're just in negotiations with the bank there, and we'll provide an update when we have something to report there. Down at the bottom of 4.1, we have 194 million remarketing, and that was handled on October 3rd. Turning the page, we have a couple other transactions. An FRN remarketing, 54.5 million of dedicated tax fund bonds, and we were very pleased with the result there. As you can see, the spread on that was a 0.36% for a final interim maturity of 2016, so a very attractive rate there. Turning the page to 4-3, we have the 500 million MTA Transportation Revenue Bonds 2013E. That was a 500 million new money. As you can see here, the all-in TIC was 4.64%. This was handled by Goldman Sachs together with M.R. Beale and Company. I would just note, turning the page, that same day we also priced 116.7 million of Transportation Revenue Bonds 2008 B3. And here we went from a term mode to a fixed mode in a conversion. So there was a lot happening, and I've obviously been trying to keep you up to date and sending all the preliminary official statements and final official statements and remarketing circulars. So hopefully if there's any questions, we can take those now. So, yeah, we can keep going.
Next, we're moving to MTA headquarter and all agency items. We have one action item, the TBTA 2002E refunding authorization, and Pat will also bring us through that.
Okay. This is a staff summary seeking board authorization of a taxable refunding of outstanding TBTA 2002E bonds. The transaction itself comes to the board for approval due to the fact that current market conditions would compel us to seek a taxable refunding, because it gives us ultimate flexibility to deal with those 2002E bonds. Those bonds themselves were refunding bonds of previously issued TBTA bonds from the 1980s and 90s. Unique to that transaction at the time was the fact that we retained call rights on some of those older bonds. And we want to preserve our flexibility to exercise that call right, because we believe there's some value that can be extracted. And hence that's why we're seeking specific authorization of a taxable takeout of the O2Es, as well as the authorization to tender for those O2E bonds that are currently non-callable. So we would seek to purchase the bonds back from those investors in the open market through a tender offer. So there's two components there.
Quick question. Thank you. Has the financial advisor been involved and recommended this approach, or is this the kind of thing that you guys just decide to do internally?
No, the financial advisor has been involved, Lamont Financial Advisory.
It sounds like a very creative approach. Who's the tender offering agent and the underwriter on the transaction?
Fair question, and that was the next thing I wanted to report, is that staff has recommended a syndicate of 5 managers for this takeout. These are 5 firms that have been covering the transaction pretty thoroughly, and it would include Jefferies as senior manager, and in this case tender agent, Goldman Sachs as co-senior manager, and then Bank of America Merrill Lynch, Citigroup, and Barclays as the co-managers. And this is to really just to recognize the fact that all 5 firms have been covering this idea extensively, very thoroughly, and this is staff's conclusion after a number of meetings and so forth with those firms.
And the final question, will we get a summary for the next meeting or following the closing to show us the
Of course, with the
savings?
conclusions and what's transpired, absolutely.
Yeah. Thank you.
Okay. Sure.
What's this going to cost us?
Well, we don't anticipate any cost. We expect savings. So,
Net.
yes, net savings, absolutely. We wouldn't bring it to the board otherwise.
What do you anticipate in terms of net savings?
Well, again, as we note in the discussion here, the taxable takeout can be done either on a fixed basis or on a variable rate basis. Currently, staff is of the mind that we're going to recommend a variable rate takeout using the FRN product, something that we've been bringing to the board on a fair amount of the time as a very alternative, a very attractive alternative to the fixed rate market, particularly given that it's taxable.
So there's an inability, I take it, to quantify what that net savings will be to us?
It's market sensitive, and I hesitate to put a number out because of the fact that market's going to change. We would anticipate, again, the size of the transaction isn't very large. It's approximately 200 million of bonds. We would expect savings in a few $1,000,000 out of the taxable refunding.
That's what we anticipate reasonably.
Reasonable.
$2 million savings.
Yeah, and again, that's really the first step in what we want to talk about, and again, providing that future flexibility for those previous bonds that I talked about is part of the whole nature of this. So there's more to come as we continue to watch the bonds and watch the market opportunities relative to those older bonds.
Okay, thanks.
We need
We need a motion on the refunding authorization.
Okay, motion, please. Second, please. All in favor? Aye. Any opposed? So moved.
to your point, Andrew, the market continues to be attractive, provide attractive rates. And as you can see in the Finance Watch, there were a number of transactions that we've executed over the past couple months where we've been able to lock in financing at below our budgeted costs in every instance. So while there are certain parts of the curve where we've found less investor appetite than we would like, particularly those years between 10 years out and 20 years out, what we call the belly of the curve. Aside from that, we see strong interest on short bonds as well as on the long bonds, and so the market continues to provide us opportunities to execute our financings at very attractive rates.
Any other questions on finance?
Okay, next would be report and information items. We have 4 kind of routine items. The first one being the station maintenance receivable update for the billing period 4/1/12 through 3/31/13. That can be found on section 5, page 15. We billed $160.2 million for the period, and we've collected all those amounts. This is all for information. The second item would be the review and assessment of the Finance Committee charter. This was reviewed and approved at the Governance Committee and by the Board in July of 2013. No further review is necessary. It was just here for your information. Okay. Third item, change order report to the Finance Committee. If you recall, in July, the Board approved an increase to the change order approval threshold from what was $250,000 to $750,000 per transaction, effective immediately. What they did stipulate, however, was that beginning in November of this year, that agencies would be obligated to provide to the Board a quarterly report. Basically, what we're doing is reporting on those items that would have been subject to Board approval prior to this change. So included on section 5, page 21, is a very small list of those items that weren't approved by the Board, but it's for your information to review, and we will do this again in February. Well, that I don't know.
Because first of all, there's change orders that don't have to do with CPOC. It could be on another contract that has nothing to do with capital construction.
Okay. The next item, the preliminary budget 2014 to 2017 financial plan. That's what was presented in July, and what we do is leading up to the full Board cycle in November, we just leave it on the agenda should someone in the public want to comment on it. So it's on there just for that specific reason. That would be it for the report and information items. So next we will move to procurements. For headquarters, there are 4 procurements, 1 non-competitive and 3 competitive, for a grand total of $5,327,000.
Okay, a motion, please. Second. All in favor?
Aye.
Any opposed? So moved.
Next, moving to those procurements from the Metro North Long Island Railroad Committee. There are no procurements for Metro North. For Long Island Railroad, there are 3 competitive procurements, 2 of which are joint with Metro North, and they are for a total of $460.2 million. We have a question?
It's in transit.
Okay,
We're voting, we have 1 vote against.
okay. Motion. All in favor?
Aye.
Wait, I'm sorry, Mr. Chairman, I was waiting for the right time. I'm abstaining from the Bombardier Siemens one, please. Consistent with what I did earlier at the committee meeting.
Okay, so noted. Okay, so we have a motion, we have a second. All in favor?
Aye.
Any opposed? So moved.
Okay. Next is New York City Transit MTA bus operations. There are 4 transit procurements for large modifications. These combine for a grand total of $1,704,746,000.
Charles, this is the one you want to do? Right, this is the one, right,
Oh, okay.
right.
Okay, we have a motion,
We
please.
have that.
Second. All in favor?
Aye.
Any opposed? So moved.
Moving to bridges and tunnel, there are 2 procurements.
Can I just say
Yes,
that
sir.
it's wonderful that 9 stations on the Sea Beach line are up for reconstruction. They really, really need it, so very happy to see that one go through.
Okay. Bridges and tunnel, there are 2 procurements, 1 non-competitive, 1 competitive, for a grand total of $15,265,000.
A motion, please. Second, please. All in favor?
Aye.
Any opposed? So moved.
Also in the book, you'll find consolidated reports for the month of August. Oh, by the way, there are no items for First Mutual Transportation Assurance Company. That would conclude the finance portion. Oh, go ahead, I'm sorry.
What are the change orders that is?
Let's see.
Voucher car service repair, transit, Staten Island, Intraborough, what's that?
Several companies were awarded a new contract for 3 years.
I don't
Yeah,
know.
it wasn't
You know,
selected,
As
yeah.
you know, not every contract comes through finance. It may have gone through an earlier meeting, so.
Was that on there?
That was on the transit, that was on transit,
It
so
was-
it would go directly to the board on
Yeah,
Wednesday.
Right.
Right.
There's only some of those procurements get selected for finance and for a number of different reasons. That was just went to the operating committee and did not go to
Right.
finance.
But it will be on the board on Wednesday.
Yes, absolutely
Right.
correct.
I think that's what Alan's concerned, yes.
I just want to make sure that it was going to the board tomorrow.
Yeah, the board basically approves all the procurements, the full board. So that would conclude the
Okay,
finance
so-
portion of the meeting.
Right. Jeff, real estate, please.
Thanks, Andrew. We have 8 action items this month, all described in detail and staff summaries in your books. I think 3 are noteworthy. The first is the proposed sale of a development parcel south of our Gun Hill bus depot. This is one of the 7 New York City Transit master lease properties. You'll recall we had identified as excess and made available for marketing by New York City Economic Development Corporation. You'll also recall that we recently brought you a proposed transaction for a sale of property on Houston Street, which exceeded expectations. This is also a good result. It's $30.5 million to be applied toward our capital program. the purchasers at JV of Grid Properties in Gotham, the Gotham organization. They proposed a mixed-use project that will require city land use approvals. And again, to remind you, the transaction structure is that we surrender under the master lease, and we'll do that concurrently with the sale and upon completion of the ULURP, assuming it's approved. The second is a master lease for the double-loaded retail corridor between 57th Street and 58th at Columbus Circle Station. It encompasses about 11,500 square feet of stores, plus there'll be some limited rights and obligations with respect to the adjoining corridor. I apologize, the Exhibit A to that staff summary, which is the site plan, was inadvertently omitted. It's now in front of you. And there's also a typo in that staff summary. It refers to a letter of credit requirement equal to 125% of a guaranteed maximum price for the initial construction. That should say 120%. Again, I apologize. But the developers are planning to spend in excess of $5 million of their own money to air condition the corridor and otherwise improve the space. They'll be responsible at their own cost for subletting the stores, enforcing the subleases, and maintaining a high-quality installation over the term of the lease. Will receive a combination of fixed and percentage rent. The term is proposed as 20 years plus one 10-year extension, which will be conditioned on the making of a further capital investment in a stipulated amount. And, the third noteworthy item is a lease to house the MTA Police Department functions that need to be relocated from here to allow us to dispose of these buildings as contemplated by our office right-sizing plan. This is the last piece of that puzzle. You'll recall that we have signed a lease to expand and extend at Gray Bar for Metro North. As is recounted in the staff summary, we initially focused our search for the police on the outer boroughs in northern Manhattan on the assumption that that would be less costly, but factoring in construction and operating expenses, available terms for work letter, free rent and the like, turns out it's actually less costly to put the police at Gray Bar as well, and there are all sorts of operating efficiencies to be had in doing that. So again, we're very pleased with that result. It's $1 a square foot more expensive than the Metro North because rents are up, but even so, it's a cost-effective deal, and will be largely essentially on the same terms as the Metro North, so we'll be able to do it very quickly. Finally, just want to note to you that in our staff summary, we've brought back the housekeeping item that was tabled at our last meeting. It was a kind of a potpourri of little minor adjustments to the board-approved leasing policies, one of which John had a good question about, and then in the interest of time, it was tabled. We've clarified the proposed policy to be clear that we're only asking you for authorization to go ahead as an info item with the high bidder under well-attended RFPs. In the case of routine retail space leases, as opposed to sort of master lease we're bringing you here for Columbus Circle. So for example, we have 3 newsstands this month that were in each case there were many responsible bids, and we're giving it to the high guy. This would enable us to come to you with that for information afterwards. If there are any questions about those or any of the other items, I'd be glad to take them. Otherwise, I'd appreciate having your approval.
Thank you. I have 2 quick questions on the East Gun Hill Road and 1 quick question on the Columbus Circle. On the Gun Hill Road, if you could give a brief summary to make sure I understand it of the city's contribution. This will be credited against another number that they are obligated to otherwise
Right. Well,
pay us.
we had we entered into an MOU with them some while ago. There is an expectation that there would be another $250 million, contributed to our capital program, for which we needed to identify sources, and this and House didn't count against that.
So you don't think we're harming ourselves vis-a-vis that pre-existing commitment?
Well, you may want to comment, Bob. It was of a piece, in effect. I mean, that was part of the understanding.
This was part of the whole capital program, per se. This is in line and in keeping with what our expectation and understanding of the city was. So this is
Okay.
not agreements.
I just want to make sure it wasn't a double counting. Okay. And then, is there a risk that any environmental reviews will end up costing us some money as the remediation costs get deducted from what we are
No, well,
supposed to
look,
get?
I can say, the staff summary goes on at some length about that, because there was this arrangement to do with a small piece of the property that's in current use by a licensee. Our obligation is to remove the licensee, and then there will be some environmental testing. I consider the likelihood of there being any environmental problem there to be slim to none. And,
So it's limited, it's not going
yeah.
to significantly, there's no significant risk that it significantly detract from the 30 million.
I think that's fair, and in any case, frankly, if there were contamination there, it would reduce the value of the property, so it's.
But we wouldn't have to sell it now. We could, and we wouldn't know about the remediation. All right, right.
We have no identified use for the site. For many years, it was thought there might be an additional bus facility there, but we have no plans like that, so it's a good time to move the
But the
property.
reason we're disposing of it to help our capital, not
Correct.
just to dispose of it, so, okay. The Columbus Circle, just quickly, I see that the process started in 2012. I don't know when in 2012, based on what I'm reading here, what I read here. I just want to make sure the market has improved significantly over the last 12 months, for example, 14 months, I don't know when. This started. You're confident that this is still a market arrangement?
I am, and I'll say that this is a unique arrangement in a unique location in space that is not sort of typical of what goes on upstairs. And in addition, although as the staff summary indicates, it's not our sort of primary reliance here. There is upside potential in this deal. So to the extent that sublease rents end up being higher, there'll be an opportunity for us to participate.
Thank you.
Jeff, I recall when some of these stores at Columbus Circle were occupied and they used window air conditioners out into the corridor and heated up the corridor. So
Yeah.
when you mentioned that there's a plan to air condition the corridor, is that venting it to the street?
I don't actually have the detail of that. I don't know if Dave, if you can comment on that. But
Not install newer conditioners that's outside of the common area switch.
right.
Not
All right.
Thanks, guys. Yes, sir.